Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 30th of June, and half of a year is completed. Year to date, we've got some pretty impressive gains. Semiconductors up 50%, Nasdaq up 38%, 41% off the low, and the S&P just took 25 basis points off its year-to-date high. You can find this little spreadsheet on Alphatrends.net where I post this if you're looking or watching on YouTube. If you are watching on YouTube, you probably saw my video that I posted Tuesday evening. And Tuesday, I had mentioned what I was looking for on Wednesday morning was for the market to come down to the prior day's volume weighted average price. That means this was the prior day's anchored volume weighted average price. I wanted to see it come down to that and then to buy above the daily volume weighted average price. Well, that provided a perfect entry right here. It never went below the low of that day, and that has turned into just the perfect place to buy this market right there. That's where I bought it, and Alpha Trend subscribers did, and hopefully you did as well because I put it on YouTube for free. So, a lot of people will say, well, I bought it, because it was in a pullback. And, hindsight says that was a good thing to do. But there's no reason to buy while the market is pulling back. That's a chapter in my book, Anchored VWAP, my Anchored VWAP book, that is, Maximum Trading Gains with Anchored Volume Weighted Average Price. I also say, don't buy the breakout. In fact, in Tuesday's video, I said, if it breaks out, we want to sell some to the breakout chasers. So buying right here, selling partial on the breakout gives us a nice comfort level, and now we can raise our stops. The market has survived the test of the 5-day moving average while it was flattening out, and now we have a rising 5-day moving average with higher highs and higher lows. Next week, I would expect some little pullback. I know everyone is always looking for gaps to fill. It doesn't have to fill this gap, or it might take more time than people expect for that to happen. Monday, don't forget, we have only a half day of trading, and the market's closed Tuesday, so it's going to be a pretty quiet week. But today was supposed to be a quiet day as well, and we saw a little bit heavier volume than yesterday, but still running below the 20-day average. The fact is, only price pays, and we have great price action. People might complain about the volume. Don't listen to those people. It's about price action. Only price pays. We're in a beautiful stage 2 uptrend on the weekly time frame, and there's no reason to look for tops. This is not a double top formation. A double top is only known if it breaks below this point right here. Check my Twitter. I did a post about that today. Anyways, back to the market. I think that maybe a little bit of a pullback would be a normal thing in here. What we want to do is say, the move began right here on this day, so let's put an anchor volume weighted average price there, and perhaps next week we pull down into that level. Maybe it does it price wise, or maybe it does it time wise, where the market just kind of goes sideways and waits for that volume weighted average price, waits for the 5-day moving average. But the fact is, it's higher highs and higher lows. That's the definition of uptrend, and we're in a very healthy one. The Nasdaq is only a couple percent off of its year-to-date high. That's not the all-time high, of course, but it's pretty close to the all-time high as well. Only probably, what is that? 40 points or so, maybe another 10% off the all-time high. Just quick math numbers there, but percentage numbers. The breakout occurred here several weeks ago, and it's just maintained a beautiful, healthy uptrend. A lot of people were saying, hey, oh, that was an inside week. We need to see a pullback. That's not the way it works. We saw a little bit of a pullback last week and into this week, and again found buyers near that 20-day moving average, and you could say, hey, I bought at the 20-day moving average. It's not always going to work that way, but I would rather, as always, buy right here as the buyers regain control in the shorter term time frame. So again, that was the same exact scenario I set out Tuesday night, that we wanted to see it pull back to the prior day's volume weighted average price anchored to the beginning of that day. And that's exactly where that market opened up. And then as it made that higher high above the daily volume weighted average price, that was the place to purchase it. It never made a low below that first day, so it was a perfect entry, and I'd be looking to sell some on a breakout here as well. If it breaks to a new high, that's the time to sell a little bit. You don't want to be a buyer after the rally. So there's many examples of lessons that are in that anchored volume weighted average price book. Someone said the other day, hey, your book's expensive at $60. I promise you, you're going to get way more than $60 worth of techniques to help find strategies like this that help you get in at the perfect time when momentum is beginning with very low risk and knowing where to set your stops using multiple time frames together. So the NASDAQ, same story. We're in a beautiful uptrend. We probably see, this continuation, sell a little on the breakout, consolidate maybe. Just a beautiful trend in all of these markets. The Russell 2000, I called this a waste of time on Tuesday night. I didn't expect this to happen. We had a declining 5-day moving average, but the Russell 2000 bounced from the 200-day moving average in the year-to-date anchored volume weighted average price. I still think it's probably not the best market to be involved in because you look at the anchored volume weighted average price off the all-time high over here, which has been resistance numerous times. We're getting pretty close to that now. On the positive note, we are getting a more frequent test of that, and we have this higher low in this area. But I wouldn't be a buyer on a break above this high. Same story. You don't want to buy these breakouts. You want to buy after a pullback. So if in this case, maybe you bought this week, I didn't, but I would look for it to break out, then maybe consolidate for a few days, maybe a week or so. In other words, a scenario would be that it breaks out beyond this level, pulls back down towards that 5-day moving average, and then starts to consolidate above and below it. It makes a higher low, right? Higher high in here. This would be the place to make a purchase with a stop then when underneath whatever this higher low might end up being. And it's only a scenario. It's not a prediction. They're never meant to be predictions. But the scenario I laid out Tuesday night played out absolutely perfectly, and you've got to celebrate those when they happen, because if you have a structured approach to the market, you'll find that those scenarios play out on a regular basis. Not all the time, of course, and they don't always follow through. And I was very clear to point out that if it made a new lower low, that would be time to get out, because if it broke down, it might have continued to break down like this. So it didn't do that. Celebrate the winners. The biotechs continue to just act like garbage here. They're right on the year to date. That's that thick blue anchored volume weighted average price in the 200-day moving average. So maybe this market gets a little bit of a bounce next week if it can get above here. I mean, we have this low, we have a higher low, and maybe it's good for a trade. Maybe it's going to do something similar to the Russell 2000 that I didn't expect to rally. But it's possible going back to that biotech group that this could happen. Now, be aware of the anchored volume weighted average price from that peak. That might end up showing a little bit of supply. We have a declining 20 and 50-day moving average in here as well. So it's just, again, where are the odds the best? The Dow Jones even, broke back above its anchored volume weighted average price over here from the prior peak, and that's behaving really well. And if you look at the weekly time frame on the Dow Jones, there's a lot of pent-up energy in here. This could be the next market that makes a big move. Look at how long we've seen that resistance since the fourth quarter of last year. So 3 quarters of resistance in there. You might even look at it and say, hey, shoulder, head, shoulder, inverted head and shoulders pattern. If you look at it like that, well, then the height of the pattern from 315 up to let's just call it 345 for even numbers, 30 points, we add that to that 345, that would indicate a price objective of 375. Now that's, textbook head and shoulders pattern, the way that you look at it. It doesn't mean it's going to do that, but it provides structure, just like anchored volume weighted average price levels and 5-day moving averages. They provide structure to back up your technical plan for the market and what you might end up doing in there. Financial stocks got a little bit of a reprieve this week. They're back to the 200-day moving average. I'm still not seeing a real reason to be excited about this group, and KRE did continue its bounce off of that anchor from the recent low, although it is falling short of this anchored volume weighted average price. The 5-day moving average is rising. If this is going to fail, I think it does it something like this, and then perhaps next week you'd have to be really aware that if it breaks below the probably 39.5 and stays below that for a day or two, that it could spell bigger trouble for the banking stocks. I don't trade those, so I really it wouldn't bother me, but it might have some effect on the overall S&P 500. Energy stocks are rallying a little bit here, and oil continues to to act really weak. Probably more neutral in the intermediate term than anything for oil. But some of the energy names are starting to perk up, in particular the natural gas names. Here is oil. You can see there's really no reason to be involved in this. Natural gas, it's starting to perk up in here. So some of those natural gas plays, like RRC, PR, TELL, those might be plays if you're into those things. I'll talk about those for subscribers. One stock I went to in depth with over the last week and a half is ICE. This is the Intercontinental Exchange, and you can see the anchored volume weighted average price off its all-time high was tested here a couple times recently, and it broke above it. It broke above it, and then it pulled back and found that that prior resistance did in fact become support. I wasn't a buyer right here because I don't like to buy on a test of support. I like to buy when the buyers gain control. So my purchase was made over here on this day after the gap higher. I got involved over there, and I'm still holding this stock. So hopefully, you're involved in this one. If you're an investor, your worst case stop goes under here. If you're a swing trader like I am, my stop is currently, where's my piece of paper with that stop? By the way, while I'm looking for that, 111.84. If you're following this on YouTube, please give it a like, give it a comment. I respond to them all, and enjoy the long weekend.